Friday's jobs report is out, and while the headline looks soft, the market reaction tells a very different story. If you're a trader, what matters isn't the number that we saw on the mainstream media, it's what that data means and what's next for stocks. So as we can see with the S&P 500, not only on Friday after the jobs data came out, did we make a new all-time high, but we also had a new closing all-time high. Something that is a little bit troubling is, notice we have this rising wedge. Are we about to break to the upside, or is this going to set a trap and we're going to get a nasty, nasty downturn? Right here, we can see the US payrolls rose 50,000 in December, less than expected. Unemployment rate falls to 4.4%. Now, why the NFP news is so important? Because in 17 days, we have the next FOMC meeting. This could weigh in on the Fed's decision. Are they going to hold like the market is anticipating at this point in time, or are they going to continue to cut rates? Right now, the market's pricing in a 95.6% chance that at the next meeting, the Fed's going to do absolutely nothing. So on face value, the jobs numbers don't look that bad. Like I showed you guys earlier, we had 50,000 new jobs created. The market was pricing in anywhere from about 65,000 to 70,000 jobs. The previous reading we had was 56. Average hourly earnings came in right in line with expectations. However, they did rise from the prior reading. Now, that could also be a problem, especially with the news we have coming out this week. That could be inflationary. However, the unemployment rate dropped to 4.4%. versus a forecast of 4.5 with the previous reading at 4.6. So now as we actually go over and look at something else that a lot of people aren't talking about, let's talk about the revisions that we had coming out with the NFP numbers. They originally reported for the October numbers 105,000 jobs lost. However, they revised it down to 173,000 jobs lost, which is 68,000 more jobs lost than what they first reported. For November, they originally reported 64,000 jobs. And the revision dropped down to 56,000. So we lost another 8,000 jobs with the revisions. So the combined effect between October and November, we see a drop of 76,000 jobs. And just so you guys can see it and summarize it real quick, October, basically 68,000 jobs lost. November, 8,000 jobs lost. So the way I'm looking at it, losing jobs is not a good thing. If we're banking, the Fed is going to be the only thing that can save us and potentially cause more inflation, pushing stocks substantially higher. I think it's only a matter of time before the music stops. And if you don't think there's any inflation out there, just look at gold. Gold now trying to break right back above this area, maybe on its course to try to make new all-time highs. Keep in mind, we had that nasty, nasty down candle. And like we talk about all the time on the live streams, once we get back above 50% of a nasty down candle, quite often, we're going to come all the way back up and at minimum, test the body of the candle. That's exactly where gold looks like it's heading towards. Now, it's not just gold, but look at silver as well. Silver has this potential for a double top. However, we talked about this in the past videos that we have to break below the neckline. We'll see silver right now is going the exact opposite way of the neckline. But what's kind of suspicious out here when we see gold and silver on the move up, and even copper, which is also building on the case that we probably have substantial inflation out there, is the fact that we look at the dollar index. Dollar index is also on the rise up. Normally, when we see the stronger dollar, we see metals like gold, silver, and copper actually start to come back down. And that is not what's actually taking place at this point in time. And with all that taking place, we look at the volatility index, and on Friday, the VIX was down 6.34%. We look at the VIX on the 30-minute chart, we can see it closed very near the low of the session, basically letting us know there's very little fear out there, which is kind of strange because we see we have protests going on over in Iran, Trump sharing tweets promising that Iran's treatment of protesters will not go unchallenged, and the fact that we just captured Venezuela's president not too long ago. I'm really surprised that the VIX is at the levels in which it's at. Well, if we come over and look at the fear and greed index, right now we are in neutral territory. We are just slightly above the midpoint. And when we come over and look at the most recent investor sentiment survey that came out this week, we can see the bullishness jumped up from 42 up to 42.5. The neutral category dropped down from 31 to 27.5, and the bears also jumped up from 27 to 30%. So the bears had the biggest growth on this last week's investor sentiment survey. Now, here's something that's also going to be very concerning that a lot of traders and investors are not picking up on. But we come over and look at how all the indices paired across the board on Friday, and notice each one of the 4 indices that I tracked, the Dow, the Nasdaq, S&P 500, and the Russell, were all well in the green. But then we come over and look at advancing issues versus declining, and notice we only had 48.4% of issues advancing with 47.8% of issues declining. So with the markets being so bullish, how come that advancing versus declining isn't more lopsided towards the advancing issues? And even if you look at the sectors across the board on Friday, there were only 2 sectors in the red: financials and healthcare. Now, financials is a little bit more concerning for me because if we're gonna have a sustained rally, we really need financials to participate. We come over and look at the 1-week performance in basic materials. No surprise, outperformed every other sector, not even close. Utilities was the biggest laggard out there for the week. So as we come over and look at the XLF, which is the financial sector, which is one of the sectors that has me a little bit concerned. Notice on the weekly candle, what do we get? We get a little bit of a selling tail on top of that candle. We get a look above, a push, I believe the all-time highs, which I just confirmed was actually all-time highs. And then we actually close back down. We close right below the prior all-time high. We come over and we start looking on the daily chart. This is going to be very important. Just like we talked about with a big nasty down candle, if we can really start penetrating roughly 50% of the candle, which we got down over here, it really increases the probabilities we're going to come all the way down towards the bottom of the candle. Now in the XLF, that's going to be about 54.8. And also look at the MACD indicator down here. As we've seen the XLF making new all-time highs, was the MACD indicator also confirming those highs? Meaning, was the MACD indicator peaks going higher than the prior peaks? And the answer is absolutely not. Now, one of the charts that's been a little bit concerning for me over the past couple of weeks was when we look at the 10-year versus the 2-year spread, and notice we are starting to come back here just a little bit. This is actually encouraging if you want to see stocks continue to rally. But then we come over real quick and we take a look at the SPY versus HYG. The chart on the bottom is HYG, which is high yield bonds. And notice we've had this downtrend and now we've been able to break above that area. And also at a time we're seeing the SPY also break up and make new all-time highs. We look at the Dow Jones versus the transportation index. We've been talking about this here for a little bit. We had that same downtrend and trend line with the transportation index, the chart on the bottom. And notice once we broke out, we came back, we tried to get the little retest of that line, transportation index just screaming up. Well, this week we saw the Dow once again making another new all-time high. As a friendly reminder, Apex Trader Funding, massive sale, 80% off all evaluation accounts, special pricing on the activation fees. If you guys want to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. So now as we come over and look at the SPY real quick, notice on the weekly chart, MACD indicator is a little bit weak, kind of flatlined out there slightly with the bearish cross, trying to angle a little bit towards the downside while we have the actual SPY making new all-time highs. Now this week we produced a very small wick on the top of this candle. So more certainly the bulls were in control by looking at the weekly close. Now on the daily chart, we have this rising wedge. Now, normally a rising wedge is more of a bearish type of pattern. And we'll see if we do something like this, a false break up, and then we just simply fall right back down. Now, in the event that we do break above this area, there still is a chance because we have multiple ABC targets to the upside. The first one comes in about 702.60. The secondary ABC target would be up here at 709.65. So essentially we have an ABC pattern within an ABC pattern. Now we come over and we look at the gamma exposure levels real quick. Notice right up here, we have a lot of gamma exposure right around that 700 strike price. And we've been talking about that for quite some time. Just below that, we also have quite a bit of gamma exposure right around the 696, 697 strike price. And down below us, notice right down here, right around 680, we have quite a bit of gamma exposure as well. So as we look at this, I want to pay very close attention. If we see the SPY getting up around that 700 strike price this week, do the dealers defend it? Meaning, do they try to push it back down? Because if we clear above that 700 strike price, we're probably just going to keep running and get some type of blow off top. If we actually look at the high price on Friday, the high was 695.31. So we have a little bit less than 5 points in order to go ahead and hit that 700 strike price. Now we come over and start looking at the 30-minute volume profile charts real quick. We can see on Friday, basically just kind of a trend type of day, which is something I've warned about time and time again. whenever we get this news on Friday, which is once a month, the preliminary consumer sentiment, preliminary inflation expectations, normally it leads to some type of trend day. Now, there was a little back and forth before that, but ultimately the markets kept going on up. If we look over here at the MACD indicator on the 30-minute chart, notice it has that little bit of a roll effect. And as the SPY made new all-time highs, look at the MACD indicator. Absolutely was not making new all-time highs. Now, in the event we start coming down, one of the areas I want to watch on Monday would be 692.41. This is going to be a minus development area. Just think about this as nothing more than an inefficiency in the market. When we zoom this out here just a bit more, let's not forget we have a large gaping gap all the way down here at 683. And you know what's right below that level would be that large gamma exposure level right around 680. So we'll see if indeed the market can get down there or not. Now we come over and look at the S&P 500 futures markets. Look at the weekly volume profiles right here in blue. And these are going to be 4-hour candles. Now notice, hopefully your eyes will automatically gravitate towards this, but I can see looking at this chart, two validated ABC patterns at this point in time. We can simply grab our Fibonacci extension tool, start off measuring at the low, right up here to the high, and then pull right down here for this retracement down here. That gives us a price target of 7,089. Now we have a secondary ABC target as well, right up here like this. And then we pull right back down, and that gives us a price target of 7,074.5. So if we're going to go ahead and break and hold above this high over here, this could be the potential targets. So I want to go ahead and zone that area out, and then I want to clean off the charts here just a little bit. Now, when we look at this from a volume profile standpoint, notice what we're able to do at the closing of the week. We are once again closing outside of value. In this case, we're closing above value area high, which comes in 69.86.5. Now, what that basically says to me is quite often we're going to come back in at minimum test value area high either this week or next week. And the reason why I say this week or next week, because the rule behind that is the next 1 to 2 sessions. Since we're dealing with a weekly volume profile, one session equals 1 week in time. Now, in the event that we can break back down below value area high, I would then want to turn my attentions near this point of control, 69.62, and more importantly, maybe just above kind of this little minus development area at about 69.71. If we break the point of control, I want to look at 69.39.5. And then if things really start to get ugly, all the way down here towards this minus development area, 68.73. You might say, Mike, there's no way we can potentially go down that low. Well, if we look at the economic calendar this week on Monday, we have the 10-year bond auction, no major red folder items. We look on Tuesday, however, this is going to be a little bit different. We get the weekly ADP employment change, but we also get CPI data coming out at 8:30. Then at 10 o'clock, we get new home sales. Then on Thursday, we get more inflation data. We get the core PPI, retail sales. And let me know in the comment section down below, do you think the Fed has done a good job of getting inflation under control? Or do you guys think inflation is still elevated or potentially about to go higher? Then we scroll down and look on Thursday. What do we have on Thursday? We have the unemployment claims, just the weekly numbers, Philly Fed, and then really no major economic news on Friday. So Tuesday and Thursday could be a major catalyst for the market. Now, that could be the case where we see the ABC targets up here taken out, or we start to see a little bit of a rejection back down. Now, in the short term, I do want at minimum try to target that value area high from the prior week. We come over, we start looking at the daily profiles. Notice on Friday, overnight, we had that whole consolidation. We shot up to the upside, we came down, and then from that point on, we just rocketed all afternoon. New all-time highs, new all-time highs. Now, we have value area high, 7,016.5. We closed right near the point of control at 7,004. And we have value area low at about 69.82. Now, come Sunday night, if we're trading below this point of control, I really want to focus on, can we get back towards that weekly value area high? This is kind of going to be my line in the sand come Sunday night. And again, that value area high is 69.86 off the weekly chart. Now, notice on Friday, we had a little bit larger range than what we've been seeing over the past couple of days. We had a range of 63.25 points, and they just kept squeezing. Now, we come over and look at crude oil real quick on Friday. Wick on the bottom and a large wick on the top. Kind of a candle of indecision. What's kind of ironic out there is everybody's thinking that with the U.S. capturing Venezuela's president, we're going to get more access to more oil. Oil prices are going to come down. Well, that really has not been the case. We have now been able to get above that little swing point we talked about last week. However, we did not close above it. I still think there's a good shot that crude oil tries to run to 60.37, and then we'll see if it finds a little bit resistance at that area. Now, jumping over and looking at the Nasdaq real quick, notice the MACD indicator does have a bearish cross over here on the weekly chart. We also have this triangle right up here at the highs, and notice this week we're able to close above that upper trend line, and we're going to see, is this end up being nothing more than a false break and we come back down, or is this going to be the intended move to continue on up higher? Because as we come over and look at the daily charts, this also looks very constructive. This is one of the patterns we had drawn out on the live stream, but we have this potential for an A to B equals C to D pattern. We have already broken above the B point last week. The target is 636.28. Notice the MACD indicator down here by the zero line has a little bit of a cross on the way up, but the candle on Friday, we have a small little wick on the bottom, small wick on top of that candle. And we'll see if come this week, we get more price appreciation. The upper target, the first target I do want to watch is going to be 636.28. Now, just to play devil's advocate real quick, we have another larger ABC pattern in play. You start off pulling the Fibonacci extension from the low right over here from November 21st, all the way up here towards the highs somewhere around December 8th, pull it back down towards the low on December 17th. And that gives us a price completion at about 647.85. Now, when we come over and look at the gamma exposure levels real quick, we have quite a bit of gamma to the upside on the Qs. And we look to the downside, we have a lot of gamma exposure to the downside. We've been talking about 610 and even 600 to the downside. And right here to the upside, we are closing right near one of the gamma exposure levels, right around 627. We can see on Friday, we actually closed at 626. We saw on Friday, we closed right there at 626. So what I want to look at on this chart is the next stop would be right around 630. We start breaking 630. I'm going to be looking right up here towards 640. And we come back over and look on the daily chart. Notice one of our ABC targets is at 636. The other one is at 647. Split the difference. That comes very close towards that high gamma exposure right up towards that area. Now, as we come over and look at the Nasdaq futures markets real quick, notice on the 4-hour chart, we have a large, very large candle out there that formed on Friday. Just like the S&P 500, we were able to close above value area high, 25,822.75. So just like we talked about with the S&P, I expect that this week or next week we'll come back and visit this area, and we have the potential catalyst on Tuesday and Wednesday, like I shared with you guys a few moments ago. But one thing to also note, if we start coming back down and we hit that value area high, notice that'll be close to 50% of that candle. We start breaking a little bit lower. We're probably coming all the way down towards the candle body and maybe even this high volume node at 25,686. Anything below that, I want to watch the next high volume node and right near value area low, somewhere around 25,576. Jumping over and taking a look at the daily chart, notice on Friday, just a rip on the way up. We have value area high at 25,975. We have value area low at 25,750 and the point of control right up here, 25,954. So on Sunday night, if we are trading below the point of control, I most certainly want to look for lower prices. I want to see, can the market start making its way back down towards value area high off the weekly chart? But in the meantime, there are some additional areas I'd want to target to the downside. We can pick off each one of these high volume nodes as potential additional targets. First one, 25,912. Second one, 25,889. In the second area, 25,858. But just note, if we break above the point of control, I would want to retarget the highs from Friday and then go back over and look on the 4-hour chart. Do we have any additional targets? Well, we do. If we grab our Fibonacci extension tool, we measure A to B, then we pull down for the B to C leg, and that gives us a price completion all the way up here at 26,291.50. Then we could also pull another ABC pattern right down here, something like this, A to B leg. The B to C leg is a corrective leg right down here. And notice that also correlates very closely towards that area, 26,311. So if we start breaking back above this recent swing high, this could be the upside target to watch out for. However, I would prefer the market to come down, hit value area high first, but keep in mind, the market cares zero about what Mike would want. Now, if you're tired of risking your own money in trading and you want to check out a prop firm, then you might want to watch this next video to learn the differences between the Lucid Flex and the Lucid Pro accounts.